Bitcoin sliced through the $60,000 support on May 1st, signaling that the uptrend has weakened. While the fall has muddied the short-term picture for Bitcoin, the analysts remain bullish for the long term. Traders latch on to every bit of negative news when the price action turns bearish. Investor sentiment received a beating on the muted response to the Hong Kong spot Bitcoin and Ether, exchange-traded funds, ETFs, that debuted on April 30th. Continued outflows from the United States-based spot Bitcoin ETFs for the fifth consecutive day also did little to soothe nerves. Every bull phase witnesses sharp corrections which shake out the weak hands. The lower levels give an opportunity to the long-term investors to add to their portfolios. However, it's better to wait for the price to confirm a bottom before initiating large bets. And could Bitcoin and the altcoins start a sharp recovery, trapping the aggressive bears? Let's analyze the charts of the top 10 cryptocurrencies to find out. Bitcoin's consolidation resolved to the downside on May 1st, indicating that the bears have overpowered the bulls. Buyers will attempt to push the price back above $59,600, but the bears are likely to have other plans. If the price turns down from $59,600, it will suggest that the bears have flipped the level into resistance. That will enhance the prospects of a drop to the 61.8% Fibonacci retracement level of $54,298. This negative view will be invalidated in the near term if the price turns up and breaks above the 50-day simple moving average, $66,596, and Ether broke below the 20-day exponential moving average and the $30,057 support on April 30th, signaling that the bears are in command. The selling continued on May 1st, and the bears tugged the price below the solid support at $2,852. If bears sustain the price below $2,852, the ETH/USD DT moved downward to $2,700 and subsequently to $2,400. Time is running out for the bulls. If they want to prevent the decline, they will have to quickly push the price back above the moving averages. If you do that, it will indicate that the fall below $2,850 may have been a fake breakdown. And the long tail on BNB's April 30th candlestick shows that the bulls purchased at lower levels, but they could not sustain the momentum. And the bears continued selling and yanked the price below the moving averages on May 1st. The BNB USDT pair could drop to the critical support at $495. This is essential support for the bulls to defend, because a break below $495 could sink the pair to $460 and later to $400. And contrary to this assumption, if the price bounces off $495 and rises above the moving averages, it will suggest that the range-bound action may continue for some more time, affected basically.
The bulls will have to overcome the obstacle at $635 to start the next leg of the uptrend.
The failure of the bulls to start a rebound off $126 in Solana shows that the bears remain in control. There's a minor support at $116, but if this level cracks, the selling could accelerate, and the SOL USDT pair could plunge to $100. The greater the fall, the standing here longer, the next leg of uptrend to begin. And the only hand by the uptrend to kind of pack in, the body says 3 times. If bulls want to make a comeback, they will have to quickly push the price above the 20-day EMA. That may trap the aggressive bears, resulting in a short squeeze. The pair may then ascend toward the summertime. XRP tried to start a relief rally from the psychological level of 50 cents on April 29th, but the bulls could not maintain the higher levels. Sustained selling by the bears pulled the price below 50, opening the doors for a retest of the solid support at 46 cents. The bulls are expected to fiercely defend the zone between 46 cents and 41 cents because a break below it may start a downtrend. Alternatively, if the price bounces off 0.46 cents and rises above the 50-day SMA, it will suggest that the bears are losing their grip. An XRP USDT pair may then have extend its stay inside the 41 to 74 range for several more days. Dogecoin's fall picked up momentum after the price broke below the symmetrical triangle pattern. The bears had ever pulled the price below the neckline of the bearish head and shoulders pattern, and if the price remains below 12 cents, the selling could intensify in the DOGE/USDT pair, maybe effective leave, and you identify slide to 10 cents and eventually to 8 cents. And on the contrary, if the price quickly rises back above the neckline, it will indicate solid buying at lower levels. The bulls will gain strength on a break above the 20-day EMA, and a potential trend change will be signaled above the downtrend line. Timecoin broke below the 50-day SMA on April 30th, indicating that that the bears are maintaining their pressure. The bulls are likely to defend the zone between the 50% Fibonacci retracement level of $490 and the 61.8% retracement level of $4 capable of corner. Buyers will have to hit the special trade price above the 20-day EMA to signal that the correction may be over. If that happens, the TON USDT pair may attempt a rally to 6.24 cents. Instead, if the price continues lower and breaks below $4.25, it will signal that the uptrend has ended. That increases the risk of a drop to $3.32. Cardano is trying to start a recovery from 42 cents, but the weak rebound suggests a lack of demand from the bulls. The downsloping 20-day EMA and our sink 48 cents and the RSI near the oversold zone suggest that the path of least resistance is to the downside. If the price skids below 42 cents, the ADA USDT pair could retest 40 cents support. The bulls are likely to defend the level with all their might because a break below it may extend the decline to a central Keynesian senator. Also, in addition, the 20-day EMA remains the key overhead resistance that needs to be crossed to suggest that the bears may be losing their grip. If that happens, the pair may attempt a rally to the 50-day SMA in 67 cents, and that, as Mark Shore, along with the Army property, with some super tight, but buyers tried to push Avalanche back above the uptrend line on April 29th. But the bears did not relent. This shows that the bears are trying to flip the button uptrend line into resistance. There's a minor support at $31.92, but if this level gives way, the AVAX USDT pair could plummet to $29.24. The zone between $27.24 and $29.24 may witness buying by the bulls. Buyers will have to clear the downtrend line on the way up if they want to signal a comeback. The pair could then rise to $42 and thereafter to selenate the 50-day SMA by $45.68. This level may attract selling by the bears. Now, all the average, the bulls tried to push Shiba Inu above the 20-day EMA, $27-24 on April 30th, but the bears held their ground. The SHIB USDT pair could slide to $0.00020, which is likely to act as a strong support. Any rebound off this level is expected to face selling at the 20-day dollars and the best dollar SHIB. If the price turns down sharply from the 20-day dollar NA, the likelihood of a drop to 17.0000, the first sign of strength will be a break and close above the moving averages. Such a move will signal solid buying at lower levels. The pair may then attempt a rally to 6 quarters, may mount a stiff resistance. And we